A day or two after Liberation Day, I made a video. I'll try to post it, pin it on TikTok, about that it was a sea change in the investment world after Liberation Day. All the sovereign funds, all the countries, all the big companies, all the big investors, all the family offices, everybody in the world recognized that now they were too long the dollar, okay? And we've gone through many videos showing the size of the dollar. The transactions were still at a record on the transactions of the dollar. The dollar is not going to be replaced that easily, if ever, okay? I think there's another scenario we can talk about later. But we felt that from that moment on, people will be cutting into their dollar investments. The biggest problem that they face is where do they go, right? We said there's only 4 buckets on the currency: the Chinese, the euro, the dollar, and Japan. Then you have 2 havens, gold and the Swiss franc, and the Swiss franc's up like 13%, gold's up 30%. So we have seen people selling their dollars and buying into alternative, quote unquote, currencies, all right? We saw the yen move up, we saw, and look at the euro's up 13%, okay? So people are leaving the dollar and doing it. And now we're asking ourselves, well, what does this mean to us, okay? So today in the Financial Times, they're saying that the central banks plan to boost gold reserves and trim their dollar holdings. Remember this. Think of the words that they're using. They're being very specific here. Trim their dollar holding. And the reason they're only trimming them is they can't go anywhere else in size, okay? Yes, you and I, we can put all our money in gold or put it all in silver or put it in the Japanese yen or whatever we put it, it doesn't matter. What matters is when $1 trillion moves, it takes time. And here in the article, the very first line, what do they say? And anticipate their holdings of US dollars will fall over the next 5 years. What did I say on Liberation Day? And ever since then, it's going to take a minimum of 5 to 10 years for people to move their money around so they can lower their exposure to the dollar to a point where they feel that they have good risk management on that, okay? And so we see here that central banks have made a record purchase of bullion. Gold's up 30% since January, doubled in the past 2 years. And a record 95% of all respondents to the World Gold Council expect global central banks' holdings to increase over the next 12 months to the highest levels since it started in 2018. And here's the chart visually. You can look at it going back to 1970. And you can see how gold started moving up really in around 2011. And think about something. What happened in 2012, late 2012, when you look at this chart? We started QE again. And when did we start QE again? Same thing. This is what's happening. The liquidity is so great in the world that fixed assets are moving up, which would imply that we're going to have inflation, but we haven't seen it yet. And in that first video, we said that the Federal Reserve in New York said that everyone wants their gold back. And we see here like India repatriated more than 100 tons of gold from the Bank of England. The central bank in Nigeria wanted their gold back. The Germans took their gold back from us. So in other words, not only is they're losing trust in the dollar, and they're losing trust in where they keep their gold. They want it and physically own it. And remember what we said about when we enter into this new era that we're going into, that control is the key word that is being used by all the governments. They want to control their energy. They're going to start talking about controlling their food. They want to control their assets. No more are governments going to accept that they don't have control over what they want. This will be, I think, one of the greatest driving forces of the next 15 years as governments or regions that come together control their food, their energy, their security, their technology, and of course, their currency. And you can see gold here, and you can see how it's accumulated in times of stress. And then once the stress is over, people sell it. You can see that. So where I believe that people are going to be moving into gold and then silver, it's a secondary thing. We can talk about this some other day. What the important part is that this is actually temporary. Gold is not flexible enough to be the world currency. Not a chance. And I saw something the other day, they were saying that China is going to buy enough gold so they can back the renminbi by gold and go back to a gold-based currency and offer it out to the world. Okay, well, I wouldn't wait for that, people. I think that's just literally impossible. I think the guy said that gold would minimum have to be $30,000 an ounce for it to even have a chance. And then you have to take in, we're still growing, we need more money. It doesn't make sense. But again, we'll see how that works out. And of course, they talk about here that recent market developments around tariffs, about the Marin paper. People are now questioning the safe haven status of the US dollar. And so even those people are now moving into gold. But the last line is also something very, very important. Gold also has a downside as a reserve asset because of the storage costs and the inconvenience of transporting it. But even more than that, whether you think the US dollar is bad or the treasuries are going to go bankrupt or anything, you got to think about something. If you're the Japanese and you own $1.1 trillion worth of dollars, okay, you're getting 440 on them. When you get gold, you get zero, plus it costs you money. And so if you're getting 440 on $1 trillion, that's a lot of freaking money that they can spend on their people. So don't think that these countries are going to be like, oh, let's dump everything and go to gold. It's not happening. So far, the dollar's having its worst year in the 21st century, which we're down 9.4%. So figure it out from there. And the Global Fund survey shows that they're underweight the US dollar the most in the last 20 years. So they're underweighting the dollar, which is what we said right from day one. And believe it or not, there's a correlation between foreigners buying our dollar and the performance of our stock market. Shocking, right? So now they're not buying us anymore. And then notice at the top there, this is the red line is the foreigners' net acquisition of US equities. Notice it's turned over. It's a little thing, but it's starting. And even here, look, it says U.S. net foreign financial assets surpassed 100% of the U.S. M2 money supply since 2024, which is absolutely true. This money gave us the liquidity that we're driving our stock market up. Remember what we keep saying, last year, 2024, 74 cents of every dollar in the world, investable monies in the world were invested in the U.S. Look at the top of the chart there. It's turned over. So again, everywhere we're seeing people are cutting back on their dollar holdings. And we're seeing it reflected on how other alternatives to the dollar are doing. Gold's number one, then Bitcoin, emerging markets, so forth. And you look at the two things down there at the bottom. You have the US dollar, which is down the most, 10%, it's 9.4. And of course, until a day or two ago, oil was down because, and by the way, that's all based in dollar pricing. Now I know this is how a lot of people think. I read it every single day. The euro, like 10 years ago, was 44% of the reserve currency in the world. They're down to 16%. They were just superseded by gold this past quarter. It's 20%. And of course, we know it destroyed the pound. And now they say they're heading for the dollar. I don't believe the dollar is going to be replaced anytime soon. I have one great fear, and the fear remains the same, that foreigners will buy less and less and less of our debt, which I believe in the end will drive up the interest rates of our debt, even if we do QE. What do you think? Like and follow.